Halfway through 2025, and the only thing certain is uncertainty. With wars abroad, rapidly changing trade policy, and fraying geopolitical alliances, what's next for the economy, stocks, and bond markets? Our Midyear Outlook report tackles those questions and more. The world is changing in ways we haven't seen in decades. Capital Group's Night Watch team of economists and portfolio managers is closely monitoring the events and their investment implications. Rather than making predictions, they consider a series of potential outcomes. 4 broad-based scenarios could play out, depending on whether traditional political and trade alliances remain intact. One scenario is the trade battlefront, where tariffs and trade disputes disrupt economic activity, but traditional alliances survive. Another scenario is grand bargains, where diplomacy prevails, alliances remain in place. Meanwhile, under the assertive nationalism scenario, governments move on a path toward economic decoupling, favoring nationalist priorities in trade and security. The final scenario is referred to as the Great Powers, where large economies recognize their spheres of influence and establish competing trade blocs. Each of these scenarios have implications for the bond market and industries ranging from defense and aerospace to consumer discretionary, financials, and utilities. Ensuring national security is crucial during this period of change. One key insight in our stock market outlook is that governments may prioritize security in the coming years, which could boost business for companies large and small. Germany, known for its fiscal austerity, recently announced a large fiscal stimulus package focused on defense and infrastructure spending. Security also means reliable energy sources, stable infrastructure, and diverse supply chains. Global giants like Mitsubishi Heavy Industries in Japan, Siemens Energy in Germany, and GE Vernova here in the U.S. offer products across these categories, such as power generation, grid modernization, defense systems, and cybersecurity. And as the world faces multiple crises, large and small, bonds should be able to ride out potential market volatility, providing solid income opportunities and relative stability. We saw bonds zig when stocks zagged at the height of the tariff-related policy uncertainty earlier this year. When the S&P 500 index fell 18.7% from the record high set on February 19th to its recent low on April 8th, the Bloomberg U.S. Aggregate Index was up 1%. The S&P 500 index has since bounced back amid cooling inflation and healthy corporate earnings. Markets globally have also shown resilience. The turnaround is a stark reminder of the importance of staying invested through volatile periods. Want to know more about our outlook? You can download the report by going to Capital Ideas. And thanks for watching.